Hi everyone, it's November 28th, 2008. Happy Thanksgiving to all those Americans out there and Black Friday. Hope your shopping went well. I didn't do any shopping, but anyways. Um, Today was also the day that the COMEX, the contracts on the gold and silver contracts came due, and you as a long holder of a short contract got to decide whether you're going to take that contract in cash or you are going to accept delivery of your gold and silver. So we don't know exactly how many people decided to do that. We're going to have to wait and see. And on December 8th is when the delivery should occur for um, anyone that requested such a delivery today. So we got some time before we see the short squeeze, if there is going to be one, or if we see possibly the a default on the COMEX where those contract holders just receive cash. Now I'm seeing the price drop after that on the COMEX if they receive cash. And if they receive the gold, the price should go up. And because everybody wants gold now, not gold in the future, as the go forward rates have gone negative for quite some time now, and basically, gold in the future is cheaper than gold right now. Usually, gold in the future is more expensive, and the go forward rates express that by having a negative value. So, anyways, I want to talk about money and my understanding of it, because my understanding of it is a little different than anybody else that I've read, and it's an interesting way of looking at it. So, for example, you know how let's just say you have apples and you want to sell them to me, and I just don't happen to have any money. So I decide to write you up an IOU and give it to you. Now, for some strange reason, people around the world decide to accept my IOU and give you value of worth an apple, for example, for that IOU. And you were able to transfer that IOU to anybody else, and anybody who got that IOU was able to transfer it to somebody else, right? Because they believed it had value, and that one day that I will make good with that money, with value for that IOU. Well, since of course people don't know who I am, and they're not going to trust my IOU that I'm going to make good with it, you're not going to accept an IOU for that apple. So what you're going to do is say, listen, I got a better idea. Why don't you head over to the bank and take out a loan, right? And create an IOU from the bank, right? Create an IOU from the bank, not a loan. Create an IOU from the bank by taking out a loan, right? And they will produce one of these. This IOU, this is just an IOU, based on the fact that I have signed on the dotted line that I'm going to pay back this with some sort of interest payment on top of that for the the work involved in creating this. And that's it. And now I take this dollar and give it to you, and because everybody knows this has value, that it's good, that it's good, it can be traded for something else, but it can't be exchanged for gold or silver or something of value. It's not guaranteed to be exchanged for something of value. Not guaranteed. So that's my understanding of money. You're basically receiving, you are printing money. When you go to the bank, not the bank, you are. When you sign on the dotted line and take out a loan, you've created the money. The banks have the ability, the ability to do that, the authority to do it, but without you deciding to go to the bank, they can't do it. So it's just something to ponder. Also, another thing, going to onto another, back onto gold and silver. I read this book from Michael Maloney, and on investing in gold and silver, and I'd like to let you know that again, once again, I want people to avoid ETFs and the COMEX exchange and the Perth Mint, because in that book and on all the books that I've read, basically, they're telling you avoid any of those paper derivatives because they're just paper derivatives. Also, silver certificates and gold certificates as well. You want to avoid them because they you're relying on counterparty risk, and uh, uh, they're derivatives. Basically, they've taken your money and they have not filled their their supply of gold. They haven't like purchased the gold or purchased the silver for your certificate. They just kept it and spent it any way they like, and then they just owe you the money based on the value of gold and silver when you come to cash it in. So avoid those things with all costs. Now, there's a Canadian CF fund that I've investigated a little bit, and I'm not sure if I mentioned the correct name of that. But anyways, I've investigated that Canadian fund a little bit more, and it is a safe investment. At first, I was not too keen about it because CIBC had a percentage stake in it and so forth. But as far as I can tell, from some of the other gold investors and gold bugs out there, it is a safe fund, and I've also warmed up to gold money as well. I believe that if you want to save your gold and silver with those guys, with those particular investments, that's fine as well. But me personally, I'd rather have the gold right here and gold and silver right here, because if the government decides to do the confiscation, big deal. Maybe I'll let them have some of it and convert it to some land or whatever. But I know what they're going to do with it. They're going to revalue it up, and I want to get some of that upside. So I'm gonna hold on to some of my gold, and the other gold I'll just give them back to them, and who cares? And I'll just go into some other investment, probably real estate, because everybody would have hated real estate at that point. But when it's time to confiscate gold, things will be so bad that the government will need it, and the price of gold will be so high that it really wouldn't matter. You'll be happy to give it to them. So that's it for this evening. Thanks for listening.